They pull out, they panic, they freeze, and then they stay broke forever. Meanwhile, a select few, very few, are silently collecting everything you just dumped in fear. Not because they're lucky, because they know a downturn is the beginning of wealth, not the end. You're not broke because the market crashed. You're broke because you don't know how to exploit it. This video will expose every strategy, every framework, every calculated move the wealthy use to turn crisis into financial power. This isn't personal finance. This is war, and you need weapons. Now step onto the battlefield and don't bring fear with you. A crisis is not your enemy. It's a blood-cold test. Recession is the ultimate stress test for real wealth. While most people flee the market hoping to survive, those who understand the game dive in like predators. They don't hope for stability, they hunger for chaos. Panic drives prices down, and for those armed with cash and strategy, it's time to build empires. It's not luck, it's preparation. The wealthy don't see crisis as risk. They see it as leverage to dominate. We're taught to avoid risk. But ironically, the wealthiest people chase it, at the right moment, in the right place. They don't react to headlines, they react to mispricing. When assets are undervalued, that's not a problem. It's a reward for staying calm. They don't wait for the market to bounce back. They buy while there's blood in the streets. Those who act in the red zone control the green zone. Boldness with logic, and the reward belongs to those who dare. Not every collapse is a disaster. It's an invitation for those who think differently. While the masses panic, a few silently inject capital, scoop up assets, and reinforce their position. This isn't recklessness. This is preparation. Crises are cyclical, but not everyone is prepared for them. The difference isn't in knowledge, it's in the ability to endure fear and make decisions amid noise. Stop waiting for safety. The opportunity is already dead. The most common mindset during a crash is, "I'll invest again once it's safe." That's a dangerous excuse, because markets never announce safety. By the time it feels safe, the visionaries already bought everything worth owning. Safety is a trap. It delays you and makes you overpay for what you could have had at a bargain. In this game, people don't lose for being uninformed. They lose because they need external permission to act. While you wait for the all clear, professionals are loading up on private funds, real assets, and undervalued stocks. You read the news, they read the data, you look for signals, they look for mispricing. And when you re-enter with confidence, all that's left are the dry bones of a feast long over. The crowd isn't just slow, they need reassurance. And in finance, those who need comfort always pay the price. Waiting doesn't protect you from risk. It delays your shot at victory. The wealthy don't wait for perfect timing. They make any timing theirs. Investing isn't an emotional reaction. It's a decision before emotion catches up. Remember, markets don't ring bells at the bottom. No one declares it's now safe to invest. That safety you crave? It arrives when others have already won, and they won because they didn't wait. They built positions while you built excuses. Mass panic is a map for the wealthy. The crowd doesn't just react late, they react wrong. They sell at the bottom, hoard cash at the top, and invest based on news cycles. Meanwhile, real players use that panic as a reverse signal. When fear peaks, it's go time. They don't need to predict bottoms or tops. They just know, if fear is peaking, prices are cheap. Crowd psychology isn't harmless, it's a profit signal for those who understand it. Cash isn't just for defense, it's a weapon stored in silence, waiting to be deployed when markets burn. The wealthy don't keep cash to hide, they keep cash to strike. During a crash, they don't freeze. They target, evaluate, and execute. This isn't bravery, it's a process. And that process isn't for people scrolling Twitter for advice, it's for people with principles, foresight, and ruthless clarity. Catching bottoms is what gets amateurs wrecked. Pros don't play that game. They buy in layers. They accept margin for error. They build positions like fortresses, brick by brick, strategy by strategy, pullback by pullback. They don't need to be perfectly right. They just need the recovery to be strong enough to turn every wrong guess into a long-term asset. While you're still guessing the floor, they're already in the game, collecting everything you left behind. Emotion is the greatest destroyer of wealth. Value isn't destroyed by markets, it's destroyed by bad timing. And bad timing comes from emotion. Emotion makes you sell great assets out of fear and buy garbage out of excitement. The wealthy know this. They surgically remove emotion from investing like a soldier pushing through pain. They don't chase dopamine, they chase discounts. Emotion is the Achilles heel of personal finance. If you can't master your emotions, you'll never master your money. Investing doesn't need to be exciting, it needs to be accurate. People think wealth comes from big opportunities. Truth is, it comes from boring discipline, repeated month after month, year after year. Those chasing thrill always lose. Those embracing dull systematic execution win. They don't invest to feel right, they invest to be right. And there's a big difference between the two. One plays for ego, the other plays for equity. The wealthy don't look at charts for color. They look for entry points, cash flow, and resilience. They don't gamble, they systemize. They don't expect assets to go up tomorrow. They know value compounds over 5-10 years if fundamentals are intact. When the market shakes, they don't panic, rewrite their plan. They stay on course with the system they built before the chaos. That's not blind optimism. That's conviction based on evidence. Real assets, the inflation-proof weapon of the wealthy. Cash loses value daily. Inflation doesn't need to be extreme to destroy you. It just needs to quietly erode. The wealthy don't let their capital dissolve. They anchor it in real assets, land, cash-flowing companies, high-quality stocks. When fiat becomes worthless, tangible assets become the new currency. And you'll realize, during chaos, it's not those with the most cash who win. It's those who own what can't be printed. When financial markets tremble, real assets become hot property. Farmland, commercial real estate, private equity, even art. These aren't just pretty, they're fortresses. The rich know cash is temporary. They buy the future, not the present. They allocate capital into assets that produce, earn, and appreciate over time. While you hoard money and wait for clarity, they hoard cash flow and buy time. Their asset choices are never random. They don't buy because it feels right or because a friend said so. They analyze cash flow, macro risks, monetary policy, and transformation potential. They treat assets like weapons, not trophies. That's why after every downturn, they emerge not just intact, but stronger. And you? If you keep sitting on cash, waiting for certainty, you'll end up buying their assets later at double the price. The wealthy don't play off inspiration. They play off systems. The wealthy don't enter markets on a whim. They run on a precise system where every move is pre-programmed. Investing isn't a mood. It's a routine of automated actions built to eliminate noise. They set recurring contributions into ETFs, dividend stocks, and high-yield portfolios. They don't need to feel right. They need their framework to operate. While others chase emotion, they chase execution. They hold 10 to 20% of their portfolio in highly liquid assets, not to avoid risk, but to strike when blood hits the streets. They don't wait for perfect timing. They prepare so any timing becomes perfect. They watch data, not drama. They measure performance in ownership and cash flow, not price tickers. And they standardize behavior like a ritual, because good systems always outperform good feelings. They don't watch TV to decide what to do. They study 13F filings to see what the best are doing. They're not swayed by headlines, they're anchored in long-term trends. They don't jump on hype, they build equity through structure. That's the difference between amateurs and empire builders. They don't react, they execute. And consistent execution is what creates wealth, not sharp instincts. Tax optimization, the secret to keeping money no one taught you. Most investors lose a big chunk of their gains to taxes without realizing they could do better. The wealthy don't accept that. They use tax loss harvesting, selling underperforming investments at a loss to reduce taxes owed on profitable ones. And here's the key: they don't lose their portfolio. They sell and rebuy a similar asset to maintain their structure. This isn't tax evasion. This is playing the rules smarter than everyone else. People think this tactic is too advanced or only for millionaires. Reality? You can use it today with a decent brokerage or robo-advisor. Some platforms even automate it year-round, not just in December. They don't wait, they optimize constantly, and the IRS allows up to $3,000 of those losses to offset your ordinary income each year. If you're not doing this, you're leaving money on the table out of ignorance or laziness. The wealthy waste nothing. They extract value from everything. For them, every percent saved on taxes is capital to reinvest. They understand the tax code better than your average accountant, not to dodge, but to dominate. They don't complain about rules, they bend them legally. That's why they're not just rich, they're resilient, structured, and generational. Meanwhile, you're still asking why you can't seem to keep your money. Private investing, the game version not meant for dreamers. When public markets melt down, the rich don't melt with them. They switch arenas. They go private, where deals are quiet, returns are stable, and power is in the hands of the informed. They fund startups, buy into commercial property, join private equity funds, or invest in off-market businesses. No flashing tickers, no noise. Just negotiation, value assessment, and execution. This isn't high risk, this is high control. Prices in private markets don't fluctuate by the second, but values do rise over time if chosen well. As public chaos rises, private assets shine for their consistency and control. The rich don't guess and grab. They look for income, asset-backed security, and long-term returns. While others stress over short-term volatility, they quietly build portfolios that outlast cycles. That's how they create dynasties, not just net worth. You don't need millions to join this game today. Modern investment platforms have unlocked private markets for small investors. The question isn't, do you have enough money? It's, do you have the mindset to leave your comfort zone? The rich aren't limited by markets, they manipulate them. While you're still hoping your stocks recover, they've already become majority stakeholders in quiet companies you've never heard of. Conviction. The only asset you can't buy, only build. When markets bleed, those without conviction collapse before their portfolios do. The wealthy don't just invest money, they invest understanding. They don't need someone to tell them, this asset is good. They already know because they've read, researched, and modeled it. They know why they own what they own. And when things shake, they don't ask for reassurance. They look at fundamentals and press forward. Conviction isn't inherited, it's earned. Weak conviction leads to manipulation. One headline makes you sell everything. One panic tweet changes your entire strategy. Those with conviction don't sway with news. They sway only when logic breaks. Their belief isn't based on market feelings. It's based on systems, balance sheets, and business data. They're not influenced. They influence. They don't need certainty. They need odds in their favor, and they act accordingly. Conviction isn't positive emotion. It's disciplined behavior in dark times. You don't need genius to build it. You need the will to study what you own and why you own it. Every time you stick to your plan in chaos, you strengthen the foundation for your future. And every time you sell in fear, you weaken it. The wealthy aren't fearless. They fear the wrong thing, but act on the right thing. Strategy isn't enough. You need the guts to execute. Knowing what to do has never been enough. History is full of people with the right plan who never pulled the trigger. Between theory and outcome is a canyon called courage. The rich act when things look darkest. They don't wait for certainty. They commit when others bail. And that's the separator. Don't ask what strategy is best. Ask, do I have the guts to use it? Harsh truth. Intelligence is common. Execution isn't. The value of a strategy isn't in its complexity. It's in its repeatability under fire. Everyone wins in bull markets. But only those who execute in a crash are real players. The rich don't fold when things go red. They automate, reassess, and stick to their framework. Not because they're hopeful, because they trust the math, the cycle, the edge. And that's how they emerge with 5x, 10x gains when fear subsides. Look into the future with strategic vision. If you let each crisis knock you out, you're handing your future wealth to someone more consistent. This isn't just a profit game. It's a game of psychological endurance. Strategies can be copied. Grit must be trained. If you master it, you won't just be wealthy, you'll be untouchable. And that's the only thing the market can't take from you. The ability to create wealth regardless of circumstance. You've just witnessed how the quiet ones, calm, relentless, and prepared, turn crisis into leverage. Not by luck. By frameworks, data, courage, and systems forged in chaos. While the masses wait for safety, they scoop up opportunities others abandoned in fear. The lesson is clear. Wealth doesn't come from favorable conditions. It comes from how you behave when the storm hits. This isn't theory. This is a real playbook for those who dare. So the question is no longer, do you know how the rich get richer? The real question is, will you act like they do?